We're not wasting any time, so let's get right into it, okay? The absorption of Bitcoin, of course, and this is from Shanaka Anselm Pereira. Hopefully I said that right. I don't know if I did or not, but Wall Street just executed the most coordinated financial maneuver since 2008. In 216 hours, they captured Bitcoin, right? Like the title of this video, the bank stole Bitcoin and crypto from the retail, and explain throughout this entire video what that means and what happened this prior month and this prior week, because we need to break it down. Between November 24th and December 2nd of 2025, just a little bit under 10 days, they were able to capture Bitcoin. I want you to keep that perspective in your mind, okay? Now, to get into some of the banks, JP Morgan filed leveraged Bitcoin notes offering 1.5x upside with 30% downside protection. Vanguard reversed years of optimism, opening its $11 trillion platform to 50 million clients. I don't think you guys understand how astronomical this is. This is a lot of money with the potential of flowing into Bitcoin and other crypto assets. Bank of America authorized 15,000 financial advisors to recommend Bitcoin allocations up to 4%, which isn't a small number. Now, I'm going to do you a little bit of math here because I had to find out for myself. The global wealth management and investment portion of Bank of America is valued at $4.6 trillion globally. Now, 4% of that is $184 billion. Now, I'm not saying that every client is going to want 4% up to Bitcoin, but in the event that that does happen, that's a ton of money. That dwarfs most projects in crypto. And that's just one financial institution out of thousands, tens of thousands that are slowly going to be onboarded into crypto. That's bigger than people think it is. 4 institutions, 9 days, combined assets exceeding $20 trillion. The probability of coincidence approaches near zero. Here is why they don't want you to understand, or here is what they don't want you to understand, okay? While retail investors panic sold $3.47 billion in November. Remember the last video that I had on my channel, I talked about all of the selling that was going on in retail, right? The numbers of monthly ETF outflows on record. Institutions were building the infrastructure to absorb all of it, okay? And this is where they break it down. Very good post, by the way. BlackRock's IBIT alone lost $2.3 billion in retail redemptions, right? Abu Dhabi's sovereign wealth tripled their Bitcoin holdings in the exact same quarter. So they're buying your fear, they're buying your stress, okay? The transfer from weak hands to strong hands is complete. Now, I wouldn't say that because I feel like we're going to have a lot more of these events where financial institutions coordinate massive drawdowns in the Bitcoin price with over the next 5 to 10 years. And a lot of people who aren't ready for that are going to end up selling their crypto assets and their Bitcoin, right? It starts with Bitcoin, and then it'll come down to a lot of the bigger altcoins like Solana, XRP, so on and so forth. And then eventually, when everyone's nice and comfortable with all of those altcoins, the larger caps, you're going to see the same effect happen to your lower caps. I call them lower caps because in the financial and the stock market, in TradFi, a lot of the assets that we invest in crypto are usually capped as lower capitalizations, market capitalizations. Simultaneously, MSCI is voting on January 15, 2026 to exclude companies holding more than 50% in digital assets from global indices. MicroStrategy Inc. facing $11.6 billion in forced selling. Now, this is something else that people are not really paying attention to that could be a massive headwind for crypto. Now, with all of the bullishness coming with the Fed interest rate cuts, we're going to see, in my opinion, a rate cut, and a lot of bullishness come from the market from that rate cut. It's possible that it's a sell the news event. Anything is possible in crypto. You never want to hedge your bets too far in one side, but in my opinion, I think it'll really help ease the markets and ease the economy for sure. But the one thing I'm waiting for is January 15, 2026, because it all depends on what MicroStrategy decides to do. Now, if they decide not to sell any of their Bitcoin, they end up just being delisted, right? They're not going to be part of the S&P 500, the NYSE, all that. I think they were trying to be a part of the S&P 500, but they won't be allowed to trade as a publicly traded company anymore. So they'd have to go back to being a privately held company. Or like this guy suggests, right? They could sell $11.6 billion worth of Bitcoin. I think currently they're up to around 66 billion. So that's a pretty drastic amount. And that would definitely hurt the Bitcoin price in the short term. Or they could find a way to have more cash on their balance sheet, even out that 50% that 50% threshold that they're trying to pass and vote on. So my biggest thing is hoping that this thing gets denied and doesn't get passed, for obvious reasons. I don't want to see any major companies or institutions selling Bitcoin at this point. We've already had enough damage done to the market. The asset designed to eliminate intermediaries has been absorbed by them, which is true. It's slowly happening. You can see that a lot of these larger TradFi institutions are starting to gobble up massive portions of Bitcoin. And just begs the question at that point, when they have all the Bitcoin in the control, what does that leave us, right? In my opinion, this might lead us into some other crypto assets in the future. But anyways, the protocol remains unchanged. The network functions, the supply cap holds. You're talking about Bitcoin, but the economics now flow to Wall Street, which is something we fought against. This is the reason why Bitcoin was created, right? Bitcoin was not defeated. It was captured. It's just funny how these banks are now taking money from retail, kicking and really just forcing retail into fear. And well, don't really force you to sell your Bitcoin, but they instill a lot of fear in you, right? Through the headlines and the drawdown in prices from all the excess leverage that's in the system, right? They're here gobbling up all the Bitcoin while people are calling for a cycle top, being the fact that we hit $126,000 for Bitcoin and people calling for the 4-year cycle top and so on and so forth. But these companies are buying Bitcoin in droves. A lot of these companies badmouth Bitcoin for years, JP Morgan being one of them, saying Bitcoin's a pet rock. Now he's buying up Bitcoin ETFs. Surprise, surprise. I wonder why. A lot of these financial institutions like Vanguard, we're going to get into, didn't even want to offer Bitcoin to their clients, and we're going to get into that in a momento. So something else that I found interesting, like I said, Vanguard clients can trade funds holding crypto like Bitcoin, Solana, XRP starting this week, Bloomberg says, okay? In major reversal, the world's second largest asset manager says it will now allow both ETFs and mutual funds that primarily hold cryptocurrencies to be traded on its platforms. It's like, I wonder why the switch all of a sudden now, right? Demand from both retail and institutional clients drove the decision. In August of 2024, Vanguard CEO Salim Ramji said the firm had no plans to launch a crypto ETF. Now, it doesn't really matter what all these asset managers say about a lot of these crypto assets. Number one, regulation is coming for crypto. Number two, if all of your clients want to hold these assets, you better figure out a way for them to hold these assets, because if another financial institution decides that they're going to allow them to invest in these types of assets, they're just going to move their assets over there. You have to evolve and adapt. Anyone who stays stagnant, especially in finance or just in business in general, and they don't adapt to the changes in the way the economy is going, usually get left behind, right? We've seen it with Blockbuster, right? We've seen it with all of the newspaper companies. We've seen it time and time and time again, right? Radio companies as well. The same thing is true for finance. If these institutions don't want to offer cryptocurrency and Bitcoin to their clients, well, their clients are just going to go elsewhere, and you're not going to have a business model anymore. So it didn't surprise me when they all changed their tune. It's just funny how they come into the market, because they obviously manipulated that move down that we've had over the past month or so. And this stuff has been going on in the stock market and other assets like gold for a long time, but they're here now doing the same thing to crypto. Just it kind of sucks a bit. But anyways, Vanguard's platform services more than 50 million brokerage customers who manage over $11 trillion, which is a hell of a lot of money. If you take that 4% of 11 trillion, you're roughly sitting at somewhere just under around 550 billion or something like that of dollars that could also flow into the cryptocurrency asset class, which at the current point in time is like 1/6 of the entire asset class, which is just nuts. And that's from 2 financial institutions, which is nuts. That's crazy. Now, don't think that these massive whales and these massive crypto companies that are in crypto didn't have anything to do with it, okay? So the real reason why BTC went from 83K to 93K, whales bought 20,000 Bitcoin. Binance itself bought 8,324 Bitcoin. Coinbase bought over 6,800 Bitcoin. Wintermute bought 4,700 Bitcoin. Strategy bought another 3,800. Kraken bought 1,700. Bitstamp bought 1,600 BTC. And you can see here, you can track the wallets on Arkham Intelligence. So, and mind you, this is Prime. This is their institutional hot wallet that Coinbase is buying from, right? And you can see all the deposits right in the open, right? For Fidelity custody deposit. Look at that. Kraken, Bitstamp. So, as well as these TradFi institutions gobbling up Bitcoin, you had a lot of these crypto companies buying up a lot of Bitcoin and probably a lot of other crypto assets in this massive drawdown. So, what does that tell you? If these guys are buying up right now, do you think that they think that the price that we're going into a bear market, wouldn't you just wait for close to or somewhat to bear market lows before buying in with this amount of volume? It just doesn't make sense to me why they'd be doing it now. Um, if they thought it was a bear market, because I don't think it's a bear market. And I talked about this in my last video. Now, I dropped a video a couple weeks ago. This was on November 21st of 2025. The Bitcoin video I hoped I'd never had to make. And as you can see on screen, I was talking about interest rates. Now, as you can see, at the time, the unpopular opinion was that we were going to get an interest rate cut. There was only about 40% of people, or probability wise, that thought we were going to get an interest rate cut. On Polymarket, it was actually 36%. And it was a little bit lower just a few days before this, right? 60% thought we would have no rate change. And mind you, I'm just going to scroll down here to prove this was on November 21st, 2025. Okay. Now I'm just going to roll the clip about what I said and what I thought was going to happen. Okay. With interest rate cuts. So roll the clip. Right now, people don't think we're going to get a rate cut, which doesn't make sense to me because I'm going to get into some of the unemployment numbers that we're seeing across the board for a lot of these larger companies. And companies are laying off right now. Companies are not borrowing money to grow their companies or to hire right now because it's too expensive to borrow debt. And that's one of the reasons why I also believe that we're going to have to lower interest rates. It only makes sense. Now, clearly you can see that on December 10th, we are up at an 87% chance of a 0.25 basis point rate cut. So as before, just like a few weeks ago, mind you, just a few weeks ago when the fear was at its absolute highest, we had the rate of around 40, under 40% of people thought. Now we have around 87% of people, right? And only 12% think it's going to stay the exact same. I knew because of the financial conditions and the fact that in jobless claims are going up, unemployment rate was going up. Um, a lot of these numbers, that these metrics that we use to see how well the economy is doing, right? They're kind of going up, and then you have to think about it like it's kind of like on an inverse scale. So when you have unemployment going up, that probably means that companies can't afford to hire new people, right? And things get more expensive for people to live. So naturally, you want to lower interest rates so it's cheaper to borrow money, so you can stimulate the economy and allow these companies to have more money or access to capital on their balance sheets so they can go out and continue to grow their businesses and hire people, which in turn ends up helping the economy grow because you have more people that are able to spend more money because interest rates are lower. That's the whole ball game here. And that's why we're waiting for December 10th. And this is also why I thought we were going to get an interest rate cut. And now 87% of people out there agree with me. Now, to take you over to the Bitcoin chart, few things that I want to point out here that happened recently in the past couple of weeks. We also had that drawdown. And I thought to myself that we were at a bottom around this time, like I talked about in that last video, right? Also because the relative strength index hit the 25-point mark. Now, usually the average lines are kind of posted at 70 and 30. For me, I like to keep it a little bit lower, down at 25 and 75, because you get better buy opportunities and better sell opportunities around these levels. As you can see here, when we bottom in the Bitcoin price recently, on the last downward trend where we had this downward move here, we actually bottomed out on the RSI, and that's why I was pretty confident that we're at a bottom. I was also confident because we had the 100-week moving average as well, that we actually hit, and we're actually tested again. So now that we've tested it twice, I have a little bit more conviction in us holding this as support as well until we have our next rally and move on upward. Now, the problem with that is that we're fighting a ton of volume right now. I was about to curse, but a ton of volume. And I'm going to detail out these points for you on the chart. So if I go on over here and I get my rectangle here, we were able to hold this area as support because, let me just figure out where it is over here. Probably around 74 to just around 93K. Around there, because we had a lot of previous price action right here, And this is kind of where we're trading in right now. I also drew this line out here because we also have a floor here where we had a lot of previous price action as well, play around that 74K range. And I thought that was the absolute floor. But we ended up actually holding a lot higher in this area of support. Now, we're also dealing with a lot of resistance on the way back up. And you can see this on the chart from roughly around here. So that would be the 91K level to around the 110-ish level here. Now, the reason why I pointed out these levels is because, let me just get my brush out here, is because you can see down here on the chart that we touch this same line multiple different times on both ways up. Now, right here, we actually got a little breakthrough, but we ended up coming back down because we had a CME gap here, right? And we're actually playing around right in this level as we speak. Now, on the flip side, up at 110, we've also came close or touch and had a point of contact on this price range plenty of times as resistance and support for a while being, right? So understand that when you spend more time and consolidate in a certain price range for longer and you build up more price history, bears and bulls fighting at this particular level, you're going to have a harder time getting through it because there's going to be a lot of buys and sells in this area because it's had a lot of buys and sells previously in this area. There's a lot of volume there. So in order to push price through these levels, you're going to have a lot of buys on the long side, or in other situations like over here, right? It took us a long time to come back down through this 110 level because we had a lot of previous, right, resistance at this level. So that's one of the easier ways to look at the chart and kind of point out different zones. You want to find a place on the chart where you have tons of touches of wicks or price moving around the area. And then you never really want to hedge your bets and place your bets on, like, let's say if I was to use like a horizontal line and draw like lines, like definitive lines. Let me just get rid of this triangle here. But you never want to place and hedge your bets on like these definitive areas of support and resistance because price can go just above, just below, wick through it, depending on what type of leverage is in these price areas. So you want to use more of a price range and a rectangle just to give you a better outlook of where you should be placing your bets, because you don't want to just hedge all your bets and think that we're just going to hold this line of support here, because if we go under it like we did here, you want to be able to pick up some cheaper Bitcoin and kind of average out your price entries. Now, a post from Cryptos R Us: the US Treasury just executed its largest ever debt buyback at 12.5 billion. That's 12.5 billion of old bonds retired with freshly printed dollars, which the national debt sits at 35 trillion and keeps climbing. I think it's at 38 trillion now. That's an old metric. Anyways, every buyback is a quiet reminder the dollar is being managed, diluted, and inflated on a historical scale. And this is the reason why you hold assets, because assets always go up against dollars. Look at Bitcoin. It's went up millions and millions of percent. Any good quality assets go up thousands of percent over a long enough period of time, right? And that's only because they continue to inflate the dollar. More dollars in circulation means more money to buy assets. And this is why you hold assets and not dollars, because if you're holding dollars, you're getting that inflation tax every single year and it's chipping away at your value, the value of your money. When you hold assets, they usually tend to go up in price over a period of time. And that's how you're able to preserve your wealth and ultimately grow your wealth, which is the goal here. This is why we're all here. I also want to point out that the reason they did this was to inject liquidity into the markets, because if you don't know, when you have a bond, right, a treasury bond or a treasury bill or a treasury note, it's pretty much you lending your money to the government saying, hey, I'll take your government bond and give you my money. And the government goes to, okay, I'll take your money and give you a return on the money you gave me. So whether it's a yearly term, so usually for treasury bills are shorter terms, so there may be a year out and you may gain a certain amount of interest on that money. Or if you're doing something like a treasury bond, they're a lot longer. So let's say it's 10 years, for example, and they might give you like a certain yield on that bond. So generally, it's a pretty safe asset because you know that America's just going to print dollars to be able to pay back a lot of stuff. So the Fed actually went ahead and did a buyback of this and gave people back the money that they lended to the government. That's how bonds work, if you didn't know. Anyways, the Fed just took one step closer to QE, and this is another thing. Quantitative tightening, ended on December 1st. QT, the question is like, is it going to start? We'll have to see, right? Yesterday, the Fed injected 13.5 billion into the banking system, the biggest one-day liquidity boost since 2020. Now, it happened on the exact day QT officially ended, which was December 1st. This is not a normal move. Banks borrow from each other overnight. So this is what they call a repo market. Now, a repo market is essentially just like a short-term, a place where banks and financial institutions can go and get short-term loans, like literally overnight 24-hour loans or a couple days or weeks or whatever the case may be, and they just borrow and lend out money to each other. That's pretty much what it is, and a lot of times it's used to prop up markets. That's also what happened in 2008 with the financial crisis. The Fed stepped in and the repo market stepped in, and that's how they were able to prop up the market in such a turbulent time. And that's why it also happened in 2020. We all know what happened in 2020, okay? But last night, many banks suddenly needed cash at the same time. When that happens, overnight borrowing rates jump fast, a clear sign of liquidity stress inside the system. This same pattern appeared in 2019, repo market spike. Early 2020, funding assets before, you know what that is. I ain't gonna say that word there. Both times the Fed stepped in aggressively to stabilize the system. Like I just said, they did the same thing again yesterday. 13.5 billion injected in one day means the Fed didn't want this stress to spread through the markets, right? It does not signal a banking crisis. It signals a liquidity tightening quickly, and the Fed responded instantly. This is also another reason why I think they're going to lower interest rates. They need to start injecting more liquidity into the market, or we're going to have more liquidation cascades coming very soon. QT is already over. Liquidity is being added again. This is not an official QE, but it is the early stages of easing, which I do agree. The first step the Fed takes before shifting policy more broadly, which I 100% agree with. And the fact that we're going to have Kevin Hassett replace Jerome Powell come next year, which is a former Coinbase advisor, and a guy who's pretty dovish, meaning he's going to probably lower interest rates aggressively because the market has gotten used to near 0% interest rates. We have like anyone who thinks that the market isn't going to explode in 2026 and potentially even 2027 is out of their mind. Like out of their mind, man. Don't listen to those people. They don't know what they're talking about. Now, something else to keep in mind about Bitcoin is that its fair value is over at $150,000 as of now. So this means that the price gap between global liquidity, as you can see here, which is the pink line here, and the Bitcoin price down here is starting to deviate. And if you know anything about the Bitcoin price and global liquidity, you can see that Bitcoin has always followed global liquidity. It's around, I think it's 92% correlated to global liquidity. Bitcoin is, that is. That's a little bit of a tongue twister. Say that 5 times fast. And that's why I also expect Bitcoin to catch up with global liquidity next year. And the fact that we're at fair value means we're super oversold, and we're actually hitting the bottom region of the oversold mark, which is another reason why I believe we bottomed as well. So great chart, and it gives a little more insight on what's going on with the markets right now, where we can expect Bitcoin's price to go in the near to medium term. Now, we also want to take a second to talk about the SEC chair. So Vivek Sen, this is a post from him. The SEC chair just announced live on CNBC that they are working to pass the Bitcoin crypto market structure bill this year, which is huge because this is going to give the clarity that a lot of banks and financial institutions need before they can dive headfirst into all of the other things that crypto has to provide. Bitcoin is the first step into the door. It's like the beginner's guide for people that are getting into digital assets. And this is why we position ourselves early in the altcoin sector, because we know it's coming at some point. Regardless of what the time frame is, we're holding assets at just a few $1 billion, maybe a few tens of billions of dollars. A lot of times on my channel, I talk about stuff that's just a few, like 9 figures, or maybe something that's like 8 figures. But these are things that are going to get swallowed up by Wall Street. So it's important for us to position ourselves now before this time comes, because in 5 to 10 years from now, when the cat's pretty much out the bag and everybody's familiar with crypto and they're buying crypto assets, it's going to be too late, right? We're here at a time that we're never going to get back in history. So with also buying strong assets like Bitcoin as well and Chainlink, it's good to have a portion of your portfolio that's in a little bit more speculative assets, quality, right? Quality assets. It's really going to help excel your portfolio and really help your wealth generation. I am telling you. We've talked about a whole slew of different crypto assets that you should be holding around this time. But if you like the video, if you found any value, leave a like, okay? And more importantly, share the video out to people so they can get this information. This is good stuff to keep up on the markets. And I do this stuff every week. So subscribe to the channel. Leave a comment if there's anything you want to talk to me about, any questions I can answer and help you, right? What's anything that you heard in the video. I love you guys, and I'll see you in the next one. Thank you for watching.